10 minutes to the bell and stocks are rolling here. We got the bond market playing along too, no volatility. Let's bring in our team for the Schwab Big Picture close to the week and a little heads up into next week. Kathy Jones, Chief Fixed Income Strategist. Michelle Gibley, Director of International Research at Charles Schwab, joined me this afternoon. Kathy, how much of this week's story is about the bond market holding on and kind of having a recovery day to some extent? No follow through to that big crash yesterday.
Yeah, it's quite a week for volatility. So we had two good auctions, the 3-year and the 10-year, and market rallied, continuing on the favorable interpretation of Powell's comments after the Fed meeting and some soft data. And then we got hit with that 30-year auction. And I think there may have been some contribution there from the ICBC problem with liquidity during the auction in the Treasury market, and then Powell following through with hawkish remarks. So we had quite a wild ride, but things seem to have settled down today and stabilized, and it looks like yields are drifting a little bit lower. So on the week and over the last 2 weeks or so, yields are still down.
So did we kind of live to fight another day on the supply side story for bonds then? Because, yesterday it was getting pretty doomy out there again.
Yeah, and again, I don't know how much of that had to do with the liquidity issues and the hack attack on a bank that kind of disrupted liquidity, or how much it was just that yields had backed up so much, or prices had gone up so much, yields down so much that the 30-year didn't look good. Really kind of no solid answers on that one. But at the end of the day, things have calmed down. The market's gotten through it. I think we live to fight until the next auction.
All right. And within all that, the dollar also kept a cool head, stayed pretty firm throughout the week. Maybe the economic data here still better than the rest of the world. Michelle, what's your read on that trade-off when we branch out our examination here to the other data we got from Europe, we got from China this week?
Well, I would say I'd kind of point to next week we're going to be getting inflation data, not just here in the U.S., but also in the U.K. The economy there is weak. We had 3Q GDP out of the UK, 0.0%, so quite weak. That would be, a little bit different than what we're experiencing here in the US. CPI peaked later in the UK than the rest of the major developed economies, but it's really eased. It's come down quite a bit from 11% and now 6.7% in September. And then the reading we're getting next week is expected to be 4.7%. And again, that's because slower economic growth and also some, easing of base effects from high oil prices and energy bills a year ago. Core and services CPI remain elevated, but we're seeing some job losses and also some fewer job vacancies, and that could put a cap on wage growth and keep the Bank of England on an extended rate pause. Bank of England Chief Economist Hugh Pill favors a table mountain approach to rates, and that's keeping rates higher for longer versus continuing to hike, then only having to cut later.
How rough is their economic outlook right now? I mean, the fact that they're still going to get CPI at 5%, but they're trying to let the market kind of stabilize without being aggressive with hikes. Is that because they've lost confidence in the economy there?
I mean, the economy's actually done better than expected in the UK. But, they do think that things are going to slow as, we get the lagged effect of monetary policy hitting the economic growth there in the future.
Okay. Thinking about then the trade-off, U.S. Versus the rest of the world as we go into the rest of the year. There's all the talk about whether or not we're going to get a Santa Claus rally, but we do get kind of a first look at spending for the holiday season from China, right? I mean, they got Singles Day.
That's right. We get Singles Day, or 11/11, and that starts next week. And it used to be just a 1-day or 2-day event, but now it's a multi-week period of deals to try to incentivize consumer spending, similar to Black Friday here, how it's evolved. In China, there'll be live streaming deals and trying to create some excitement to get consumers to open the pocketbooks. And this is really important in China right now because consumer confidence is yet to recover from those really harsh zero COVID policies last year. And the consumer is really key to China's economic recovery. Positively, September retail sales picked up. And so next week, we'll also get some October data to provide insight into how China's recovery is going.
Okay. Here, Kathy, what's the main driver? I mean, obviously inflation next week going to be important, but economically, the kind of backbone of the bond market, do we look to see strength in the rest of the data? Does it look like we've got some momentum behind us?
Well, that's going to be the test that the bond market has next week. We'll get retail sales. Those are expected to be on the soft side, data correcting from last time around. And then the inflation data, obviously, the most important driver for next week. What we're seeing in the data is actually some softening. We'll see if that continues. But most of the data should show a little bit softer in the way of economic growth, particularly looking at continuing claims. All of those with high frequency indicators have been pointing to slower growth, so we'll see if that continues next week.
But you guys also see, Kathy, a little bit of strength able to remain in the dollar despite some of the economic cracks here?
Well, it's a relative strength, right? It's relative to what's going on in Europe, which is soft, as Michelle has talked about, and certainly China. So when you look at the dollar, what's really been driving it are those interest rate differentials and the relative strength of the U.S. economy coming out of COVID, and that's been really the story for quite some time now. As long as that continues, and it looks like the Fed is more likely to stay higher for longer relative to the rest of the world, or those differentials stay, 250 basis points. That's going to favor the dollar. I don't think it gives up until the Fed indicates that it's on the cusp of lowering rates.
All right. Nice setup for us next week with the big picture. Thanks, guys. Michelle Gibley and Kathy Jones. Good convo here to finish out the week as we've got about 3 minutes until the bell.